Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, MBL Infra, that's the stock in focus. Remember, the company allotted nearly around 6 crore 33 lakh shares of at a price of around 10 rupees to the promoter and the promoter group, and that's what's taken the promoter holding to around 68.5% stake. To understand that and more, and in fact what's going on their debt front as well, we're joined by Mr. Lakhotia, the chairman and managing director of the company. Thanks so much for joining in, Mr. Lakhotia. If you could give us a couple of details, sir. Your stake is going to go up from the mid-20s to around 68%. So I think under the code, there's no need of an open offer. And if you could tell us, what do you plan on doing with this money?
The company's resolution plan has been approved under IBC 2016. As a part of the order approving the resolution plan, the promoters are inducting 128 crores and the bankers are restructuring the debt. By way of restructuring, the bankers are taking 880 crores of non-convertible debentures to be repaid over 9.75 years at a nominal interest rate of 0.1%. And the promoters, as part of that resolution plan, have inducted the first phase of the equity, by which 63.3 crores rupees have been inducted into the company.
Sir, what's the total debt on your books, you said?
Total debt is 1150, of which now 880 will comprise of non-convertible debentures to be paid over a period of 9.75%.
1150, what are you borrowing at right now? Because last year you spent, what, 250 crores in interest costs?
Last year we spent around 145 crores in interest cost. This year we expected to bring it down to 30 crores.
Now, Mr. Lakhotia, we're looking at your P&L account. Out there it's showing that you have spent 250 crores of finance cost. Maybe that was at a higher finance cost, and maybe post this restructuring, it'll come down. But as of last year, the total finance cost that you have paid is around 250 crores. So explain this to us, sir. What is the total debt in your books? How much of that has been restructured? You're telling us 880 crores has been restructured. So just break that down for us. And as you said, I think your interest cost will be around 30 crores, right? So run us through those details. How have you restructured it? Break that up for us. And how does your interest cost come down to 30 crores? Go ahead, sir.
Sure. As a part of the resolution, 15 financial creditors have voted in favor of the resolution plan. And accordingly, they are being paid as per the part of the resolution plan. So the reduced debt on the books of the company becomes 1150 crores. As there are 5 dissenting creditors who opted for the payment of liquidation value, so that reduces that by 269 crores. That's why the debt has gone reduced by 269 crores, and it has got restructured. By way of restructuring, 128 crores is being inducted by the promoters as equity at par, and the bankers, they have been allotted 880 crores of non-convertible debentures to be paid interest at the rate of 0.1%.
So the 1150 crores,
and they will be redeemed over a period of 9.75 years.
The 1150 crores that you're saying is post the restructuring.
Yeah, it's post the restructuring.
And before that, how much was the debt on your books, sir?
It was plus 269 crores. Adding, if we add 269 crores of the dissenting creditors loan, it was that pre-resolution.
Right. Somehow, sir, the numbers don't match up given the fact that you spent about 249 crores in finance costs in the last fiscal. But anyway, you have some receivables and payables as well. I see close to around 900 crores in terms of trade receivables. Who are they from, and when are you likely to receive them?
Are you likely to receive them as well?
Right. Yes. We entered into the IBC 2016 because of mismatch of our receivables. They are from government organizations which are under arbitrations. Lot of arbitration awards have already been received by us, and the others are in the process of arbitration. They will be received in the long term.
Okay. Mr. Lakhotia, you're saying lots has been received already. So how much has already been received, and how much are you, how much are you hopeful that you'll receive?
No, what I have said is there are a lot of arbitration awards have already been received.
Correct.
And the balance amounts are in the process of arbitration. Okay. So that is how we have classified these receivables into long-term receivables. And that's why the need for resolution of the under IBC 2016 here.
But will you receive it, sir? I mean, how hopeful are you that you'll receive some of this money, maybe in FY19 and
Yes,
FY20 and FY21? Go ahead, yeah.
No, they will be received on a long-term basis. We are sure of receiving them,
How
but
much?
not in the short term. They will be in the long term. We will be receiving the entire amount along with interest. But of course, arbitrations and dispute resolution, they always take their own time.
But sir, if you could tell us a little more. Now, these are the things that you've done already. This is what will happen. What does the business look like right now? Do you have any orders that you're getting? What is your order book right now? Because earlier I remember you had to surrender your orders because of non-performance norms.
No, none of our project was surrendered because of non-performance. Because of liquidity constraint, mismatch of receivables and payables, our accounts turned bad with the bankers, and that's why IBC 2016 was invoked. The resolution plan has now been approved, and as part of that, we surrendered some of our projects. Some of them were sold out to our joint venture partners, and some were foreclosed. All the existing projects, 11, they are doing good. And we have an order book of about 1,500 crores right now, which we expect to, out of the 11 projects, we expect to complete 9 projects in the next quarter or so.
Oh, next quarter. Okay. So, order book of around 1,500 crores. You told me, sir, that your interest cost will be around 30 crores, correct? For this year?
Yeah.
So, a couple of parts
For
we
this
have.
year, it should be around 30.
So, we have a couple of parts. Now, let's, out of that 1,500 crores order book, you're saying a few projects will get completed in this year. So, in this year, what will your revenues look like?
Now, out of 11, 9 will, this year our revenue should be around 700 crores top line.
Okay.
With EBITDA of about 11% and PAT ranging between 4.5 to 5%.
So that's 35
Next
crore
year,
net
it should
profit is something
increase
that you're
significantly to 15.
targeting.
Yeah.
So
Next year, the sales should jump to 15. Yeah.
Go ahead, go ahead.
Next year, the sales should jump to 15 crores with similar EBITDA, and all our existing projects, they will all be completed by next year.
Okay.
And then we will have all fresh orders.
Okay.
And we, that is how we have consolidated ourselves.
So, Mr. Lakhotia, what you're telling us here on CNBC TV18, because a lot of your investors will be very, very worried. The stock has been a relative underperformer. If I tell my director to pull up a wider time horizon chart, you'll see the stock has seen a sharp correction. So, you're saying this year that MBL Infra is going to do 700 crores off top line, and at 5% margin, it's going to be around, net profit margin will be around 35 crores, correct?
Very correct.
Okay.
All right, fair point. So before we let you go, Mr. Lakhotia, there were also, there was word on the street that part of the reason for the stock to underperform was their selling on account of promoter group, perhaps some sort of family rift or something. Could you clarify on that?
No, there was no family rift as such, but when a lot of shares were pledged, and pledge was invoked as the price reduced by margin calls, and that led to the promoter shareholding going down.
Okay.
And this was part of, but ultimately, the resolution has already happened.
Okay.
And we are starting with a clean slate now.